Closing costs are, well, let's face it, just about everyone's least favorite part of closing. And they can be even more frustrating if you don't necessarily understand why certain charges are necessary. One question that comes up pretty often is, why do I need to buy title insurance for my lender? I'm not even conveying title to them. Why do they need their title insured? Well, it may surprise you to learn that you actually are conveying legal title when you use a property in California to secure a mortgage loan. And because that's how the lender makes sure they're going to get their money, they want to be extra sure that it's safe and secure. A lender's title policy is how you guarantee clean title as collateral for your loan. It's also the topic of today's episode. For WFG Title, I'm Will Gray, and you're watching the Title Insurance Experience. Wait a minute, what do you mean I'm conveying title to the property? Title means ownership, right? I'm not giving the lender the property. To answer this question, we need to take a look at the instrument that secures a mortgage against a property in California, the deed of trust. It's going to be the topic of an entire video yet to come. But here's a sneak peek. The deed of trust involves three parties: the beneficiary, who's usually the lender, the trustor, who is you if you're taking out the loan, and the trustee, which is a third party that actually accepts a form of legal title. It's not equitable title. It doesn't give them the rights that you have to use and enjoy and possess your property. It simply grants them the right to sell the property at auction in a trustee's sale at the end of the default process. So yes, legal title is being conveyed, but no, it doesn't mean the lender can walk into your house whenever they feel like it, sit on the couch, put their feet on your coffee table, and turn on the football game. And once the loan is paid off, the lender is responsible for recording a reconveyance, which literally conveys that legal title back to you. If you've purchased a home, chances are you hold an owner's policy of title insurance. And chances also are that you didn't pay for that policy. It's actually traditional for the seller to pay for the owner's policy of title insurance that protects the buyer. It's a misconception sometimes that the seller is somehow paying for their own title insurance. They're not going to be holding title to the property any longer, so there's no title to insure for the seller. The seller is guaranteeing clean, marketable title to the buyer. And providing a policy of title insurance to the buyer is their way of making that guarantee ironclad. So when you use a property as collateral for a loan, you're making a similar promise to the lender that you are conveying clean legal title to them. And just like buyers, lenders tend to demand a policy of title insurance to back that promise up. So while closing costs are negotiable as far as who pays for what, traditionally, the person guaranteeing clean title to another party pays for that party's policy of title insurance, which formalizes that guarantee of clean title. A natural question regarding lenders' title policies is, well, my lender doesn't have the same risks that I do with title. They're not going to be living in the property. They're not going to own it for the long term. So title issues that might be a problem for me won't be a problem for the lender. And yes, in fact, that is true, which is why the lender has a different title policy than you do. there are certain risks that lenders need to be protected against. There is some overlap in the risks that we cover for the lender and the risks that we cover for a homeowner. If someone such as a long lost heir of a previous owner suddenly surfaces and successfully challenges a buyer's right to that property, then not only is the buyer out of the house, the lender is out of collateral because the buyer did not actually have the right to use that property to collateralize the loan. This is an extreme example to illustrate the concept. It's not actually very common to see that type of claim on title. A more practical concern for lenders is their lien priority. Lien priority is extremely important when it comes to the default process. And I promise in a future video, we will take a deeper look at exactly what that default process looks like. But to briefly summarize it, if you default on a deed of trust, there is a somewhat long process whereby the lender makes a good faith effort to get in touch with you and help you bring the loan current. Then, if that's unsuccessful, records a notice of default, and a few months afterwards can record a notice of trustee's sale, which sets a date for the property to be auctioned off to the highest bidder. The funds are used to pay the foreclosing lien holder up to the amount that they are owed, and any funds remaining are used to pay off any liens that are junior to the foreclosed lien in the order of their lien priority. And the winner of the auction takes the property subject to any liens that are senior to the foreclosed lien. Which liens are junior and senior in lien position is by and large determined by when the liens record. All other things being equal, if there are multiple liens on a property, the one that was recorded earliest is the senior lien. Lien priority can be changed by an instrument like a subordination agreement, in which a lender that is willing to take second position agrees to do so in favor of a lender placing a new first loan on a property. Also, some items like IRS tax liens automatically take first priority no matter when they're recorded. The bank can get in line. Uncle Sam's going to get paid. Lenders look to their policy of title insurance for a variety of protections, but chief among them is protecting their lien position, guaranteeing that they're taking a lien in the position that they believe they are. In most cases, this means that we're making sure they're getting that first position lien. But again, this isn't always the case if they are knowingly and willingly placing a second or even third mortgage on a property. Having a title company insure the transaction also helps the lender avoid unhappy happenings such as forgery or fraud. Someone purporting to be the owner of a property who actually is not the owner, using that piece of real estate to secure a loan that they have no intention of paying back. Lenders' title policies, when compared to owners' title policies at the same dollar amount of liability, tends to be pretty inexpensive. And when you think about that, it kind of makes sense. The risks that we're indemnifying the lender against are, for lack of a better term, generally less risky than in the case of an owner's policy. And this is made all the more so by the fact that the lender's interest in the property tends to be temporary. The loan will eventually be paid off if all goes well, and that even clouds on title that might somehow slip past our radar, which is, rare, but we're people too, and people do make mistakes, are still not super likely to result in massive losses for the lender. Because a title-related loss would only be realized by the lender if they had to complete the foreclosure process on that property. Also, in the case of a purchase transaction, a lot of the work that we have to do to ensure clean title for the buyer and clean title for the lender overlap. So we're able to bundle the two policies and offer the lender's policy on the cheap. The actual cost for a particular lender's policy of title insurance depends on the amount of liability in that policy. Rates vary from company to company, but if you'd like to see WFGs, you can check them out on my website at willfortitle.com. And that's Lender's Title for you. If you found this video helpful, please consider liking and or subscribing to stay in the loop as I continue to drop new content. Like I've mentioned, we have a few big topics coming up that really have a big impact on the day-to-day practice of real estate and have a lot of significance for real estate professionals as well as for homeowners and for buyers and sellers. I'm really looking forward to seeing you next time. Until then, this is WG from WFG signing off.